Hello everyone. Today I like to here are 10 basic investing tips and tricks everyone should know. So if you are a beginner, this video is especially for you. So without further ado, let's begin. Number 1 is to start early. The earlier you start, the more you will return. To illustrate the power of compounding interest, we are here on my computer. Let's say you have 10,000 rupees lying on your house with no investments, nothing. So that is where you also invested. The inflation is going to eat away your money, and so the value of your money will decrease. Let's say you take a step and invest for just 1 year at 8% interest rate, 10,000 rupees obviously, and then your money will grow by 800 rupees for a year. Not bad, right? Now what do we do for 10 years? What do we do for 10 years? Your money will surmount to around 22,000, right? So let's say if you invest early and you can invest regularly per year for 30 years, then how much your money will be worth? It will be 1 lakh rupees. And let's see the jump from 40 years to 50 years. You might be surprised. So let's say at 40 years you have 217,000. Then at 50 years it will be boom, almost double. At just 10 years your money will be doubled, and for 60 years it will be 1 crore rupees. So this is the main benefit of starting early. The earlier you start, the more money it will get compounded. The next point is to control your emotions. There is a famous Warren Buffett quote that says, "Be greedy when others are fearful, and be fearful when others are greedy." If you want to learn how to control your emotions, there is a great book called Unshakable. I would definitely recommend that. And one of the major investing tips that you have to understand is to measure your risk tolerance. How much risk are you able to bear? My advice is to put money into savings and FD before investing into stocks, and it ties back to the first step to diversify, and also because those money are relatively safer than investing into stocks. So it also depends upon your risk tolerance. Diversify your portfolio. Don't put all your money into one basket. You may or may not know about like investing in individual stocks, mutual funds, SIPs, and whatnot. There are people who invested solely holding and they lost all of their money. Like the examples could be FTX, Terra Luna, etc. There are
all the same if I just took those checks and burned them and thrown them into the wind or whatever.
lower the risk, lower the rewards. To give you an example, have you ever wondered why US Treasury bonds are only like 2%, whereas the government Brazilian bonds are like 6%? Because they are more risky. So as a beginner, you definitely want to avoid high risk plays and go low. Now I need you to listen to the fourth point very carefully, because it is a very big misconception. The point is 100 rupees into 1 crore in a year. I'm sorry, it is just not possible. So let's say you are able to invest 25,000 year. So your 10 lakhs, the previous 10 lakhs premium suddenly jumps to 25 lakhs, and let's say you are a phenomenal investor. So you return not 8% but 12% a year, and let's see the magic. Then your money comes to 2 crore 24 lakhs. It ties back to the first point, which I said about compound. For that to happen, you would have this, just plainly not possible. Okay, now I get back to my fifth point. The fifth investing tip that I have is that some people are better off not investing. I know it sounds counterintuitive, but this is the truth. You are better off putting your money. Some people, especially if you haven't done any market research, you don't know anything about fundamental analysis, technical analysis, or quantitative analysis, you are better off handing your money to some financial advice, some financial person, or putting your money into SIPs. Before buying and investing, it is very important to do a lot of research. My next point, so seventh point, ties back to the fifth, is that you do not listen to any noise or people. Do not buy a stock because some random person on the internet told you to buy. It is a way to disaster, and it will most certainly not end well for you. Last but not the least is to avoid penny stock. So guys, thank you for listening to me. If you have any suggestions on how can I improve, please let me know in the comments below. And if you didn't understand any portion of the video, please do let me know. And I would really appreciate if you liked and subscribed. So thank you.